Hey everybody, Boris. Welcome to the weekly technicals for November 14th to November 18th for the majors for euro dollar, dollar yen, and pound dollar. The theme next week is going to be dollar power. It's really all about dollar strength, which we saw, of course, this week after the very surprising but very powerful victory by Donald Trump. Donald Trump now is being viewed by the market essentially as Reaganomics 2. And for those of you in the currency market, just to give you a little bit of perspective, when Reagan took power, the dollar surged. And the idea here is really essentially twofold. We are going to have massive Keynesian spending, which is going to do two things. Obviously, juice the growth of the U.S. and put upward pressure on interest rates from that perspective, but also pretty much destroy the credit of the United States as well and get yields up with that respect as well. So whichever way you slice it, it really appears that U.S. yields are going up. That's going to give the dollar a lot of strength in the near term. The secondary thing that's kind of interesting, and just people are starting to talk about this, is all very, very preliminary. Of course, nothing is immediate. But just from a longer term currency point of view, one of the bigger planks of the Trump administration is to repatriate all of the U.S. profits from all the multinationals, like, for example, Apple and Microsoft, that is parked overseas. The repatriation would probably involve sort of a one-time tax holiday of maybe a 10% tax versus a 35% tax that they would normally pay. But the bottom line is, should that happen, it is a massive, massive boost to the dollar as far as repatriation flows, because all of that money that Apple holds in euros in Ireland, for example, now would have to be repatriated back to the U.S. in dollars. So there's a lot of reasons to think why the dollar continues to go stronger. And next week, really, there's nothing on the fundamental side that could sidetrack that issue. We have two prime events, which is retail sales and U.S. inflation data. Both are expected to be a little bit better, especially U.S. inflation data. And if that's the case, then indeed you have a very strong potential here for dollar to rise. The rates have really moved very much favorably in the dollar column, of course, since the election. We've had this big, massive turn. We'll get to the charts in just one second. But really, the levels in the euro have moved way down to resistance being 1050 and now supported at 107, which is near-term lows on a multi-month basis. In the yen, 105, which was resistance, now becomes support, and 108 now becomes the longer-term resistance point. And the one currency that has withstood the dollar onslaught and has had its own mini renaissance has been the pound. The pound actually has held bid quite well, trading around 124, and looks like it wants to go to 127. So there's a couple of UK data points this week that are important. We have labor data this week, we have UK inflation data, and we have the inflation report. All of that very likely to be hot for the UK story. But I think the more interesting sub-story here is that a Trump win is actually super positive for the Brexit backers, because one of the biggest threats to Brexit was that U.S. was not going to do bilateral trade negotiations with UK. Trump is very sympathetic to Brexit. Therefore, he would make all sorts of concessions to make bilateral trade negotiations with UK, and in turn would even probably pressure the Europeans to allow UK to participate in the European market without having to give up their immigration demands. So the Trump win has had massive reverberation, not only on this side of the Atlantic, but on the other side of the Atlantic, by basically completely supporting the Brexit story. And that's what's, I think, given a hidden bid to the pound and has made it a very strong relative trade. Let's take a look at the charts here and just see how everything shapes up as we go forward. So, of course, I think the most obvious point on the charts here is this incredible, massive flame-out candle, the huge reversal in trend from anti-dollar to pro-dollar moves here, as the euro just completely flamed out in the post-Trump win reaction and turned massively around. I think this huge shift in sentiment is not only powerful technically as a signal, but of course fundamentally. It basically signals to us, I think, that every rally in the euro is a sell at this point, a massive sell, certainly at least at 1050, probably even all the way to 1150, as the pressure on the dollar, especially pressure now is on the euro, with the market now anticipating higher U.S. rates, higher U.S. growth, king dollar, and potentially, really potentially, for the first time I think I can say this with a much far higher degree of confidence than I've ever had in a long time, the prospect of parity. We really could see a prospect of parity, dollar to the euro, as Trump juices up the U.S. economy, pumps up the U.S. rates, and the Europeans remain relatively lackluster, and the momentum really shifts towards the dollar. The repatriation story that I talked about a little bit earlier could very much play into that as well. So this is long-term views, but in the short term, I think the 107 level is the one that everybody's going to be watching as a key support level. Now, in dollar yen, this story is a little bit different. Same kind of a thing, massive, massive reversal to the upside, but we are getting stymied a little bit at the 107 level. A clearance of the 107 would definitely open up the run. This is the high over here, I believe, is what, 107.50? Yeah. A clearance of this 107.50 is very, very sticky, but beyond that, it really opens up the run towards the 108, 109, and ultimately really towards that massive, massive high, which was what? This was 111 in June, right? So that target very much in play all the way up to the end of the year. So we'll be watching that very much with interest. But right now, dollar yen certainly very much a buy. Any kind of a slip below provides a bid to the uptrend and a potential move here towards the 107, 108 as we go forward. And lastly, the cable story, as I said, has relative strength here. Cable is actually turned up. We did kind of stop in front of the 127 level. 126.72 was the high here, but it's holding bid quite well underneath the 126 level. 25 now is the near-term support. 24 is sort of the more conventional support. There's a series of lower highs. Cable looks very strongly bid. If we get any positive data this week, it's certainly 127 definitely goes, and we could potentially see as high as 128 in cable. Cable relative strength is going to be one of the biggest stories this week. We're going to try to exploit it in our crosses section. But in the meantime, I think there's the underlying thesis for the week this week is that any dip in the dollar is a dip to buy, as dollar rally is for real. Wishing you guys the best luck, the best trading. Boris, over and out.